everyone, Brian here, and surprisingly enough, after my last video, many of you had requested and asked for me to talk about my experience in the mortgage business and hear my opinions about how a lot of that affected not only our country but the world as far as the current economic crisis, and you really wanted to hear all my opinions on it. So I figured I would do that for you in this video. And I'm going to start out by saying a lot of this is just based upon my first-hand experience, what I saw, and my opinions on it as well. I'm by no means a financial expert, so like I said, a lot of this is just my opinion, but I'll get into it starting now. I started out in the mortgage business back in the summer of the year 2000, back when things were still pretty simple, the way things had always been done throughout, the mortgage history. You had your basic, conventional type loans that you would get from your local bank. And you had your government, which is FHA and VA, which is the Federal Housing and also the Veterans Administration for Housing. And there was also the subprime market, which was for people that had less than perfect credit histories. A lot of people had racked up debt, a lot of it due to medical bills or some kind of government tax liens or other liens on their home. Those were the basic types of mortgages that you were able to acquire. Now, all the mortgages at that time did require you to fully document all of your income and your assets to show 100% that you were able to make payments on and basically be responsible for the loan that you were taking out. And that stayed true for a few years or so. Around the spring of 2002, I had changed companies, and I was working in an internet lending division with a company many of you may be familiar with. We utilized a company called LendingTree.com. And this was around the time that the refinance boom really took place, when home values really just started to increase almost exponentially across the country. And a lot of people used their homes and mortgages almost like a giant ATM machine. They used that to pay off credit card debt, to buy cars, to put in swimming pools, to renovate their homes, and do pretty much whatever they would. Some people even took vacations with the money they were taking out from their homes. And that was perfectly acceptable at the time because everyone assumed that the home values were going to continue to increase year over year the same way they had been for the last couple of years. A lot of people had just bought a home for say $200,000 a couple of years earlier, and now all of a sudden it was worth $300,000 or more. And people thought the good times were just going to keep on rolling, and that a couple more years down the road their house would be worth $400,000, and this cycle will just continue and continue and continue. So with that being said, obviously the banks wanted to make this process even easier for all these people to continue to take out new loans and keep the economy and the prosperity going across the country. And there always was a program out there that was available mainly for self-employed borrowers, people that own their own businesses, which was called a stated income program. So I know I mentioned earlier that most of the loan programs back in the day always required you to document all of your income and your assets. But this other program was always available, but it wasn't available to the general public. For most of us that had a regular job with a W-2 that we received come tax time every year. Like I said, the main purpose behind the stated income program was for those self-employed people that filed what's known as a Schedule C on their tax returns, where obviously you're going to write off every possible expense that you can and try to write off every single dollar that your company made to obviously lower your overall tax liability and keep from paying the government any taxes, and to hopefully even get a refund back. So the banks had the brilliant idea, along with Wall Street, which is where a lot of the mortgage money comes from, to start making these stated income programs available to the masses and the general public, and for those people that did have regular jobs and W-2 income, as long as their credit scores were high enough. And back then, it was always the perfect A+ borrower had a 720 or higher credit score. Like I said, I'm not going to get into all the details as far as how credit works because I'd never be able to get through all that within the course of this 12-minute or so video. But like I said, the banks had the idea that if you had this 720 credit score, we were going to allow you to no longer show us your pay stubs or your W-2s. You were just going to tell us what amount of money you made per year, or actually on a monthly basis as it's listed on a mortgage application. And that was, we were going to take that at faith, and that was how much money you made, and that was what was going to be used to qualify you for the loan that you were applying for. And like I said, obviously home values continue to increase and continue to increase. Home builders continue to build these, what a lot of people refer to as McMansions. These homes that at the time were brand new constructions and were starting out in the $350,000 and higher price range. They had 4 or 5 bedrooms, 3 bathrooms, 2-car garages, spacious yards, and everything else. And this is obviously what people wanted. So let's say you use an example here that the average person, say, makes, just to make this a nice round number, I'm going to say a person makes $4,000 a month, which equates to $48,000 a year if you do the math over 12 months. And now if this person wanted to buy a $350,000 McMansion, and at the time, you always had to factor in what the real estate taxes were on that home as well. And of course, in these more affluent neighborhoods and where these McMansion developments were popping up, taxes were higher than they had been in other communities. And also you had your homeowner's insurance, which you had to factor in. So, with that being said, let's say that this person, like I said, that made $4,000 a month is going to buy this $350,000 home. And this mortgage payment with the taxes and the insurance included is going to come out to around, say, $2,500 a month or so. And also, of course, whenever you own a home, you have other expenses to keep in mind. You have your electric and gas bill, your cable bill, your phone bill. You have your auto insurance policy. You have groceries and entertainment money to go to dinner and whatnot that you have to account for. And of course, many of these people also have car loans. They have credit card payments that they make and whatnot. So, as far as the mortgage calculation itself was concerned, the only thing that ever shows up on a credit report that would get factored into this equation as far as whether you could qualify for a mortgage was things like the car loans and the credit card and student loans and whatnot. The month-to-month other bills, like I said, the cable, the phone, the gas and whatnot, groceries, that stuff never gets calculated in. But now let's say, like I said, with the $2,500 a month mortgage payment they were going to have, along with their $400 a month car loan and their credit card payments and everything else, was actually going to equate out to possibly that same $4,000 a month that they say, their W-2 states that they make. Now, obviously, any rational person is going to know that, if all their income is being put out into just what shows up on their credit report, they are not going to qualify for this loan because they simply don't make enough money to make those payments. Now, like I said, the banks, being the geniuses that they were, this person had excellent credit, so they were that A-plus borrower. We allowed them to say that they made, let's say, $8,000 a month without proving any of it. We took it upon faith and what their word was, and that basically qualified them for this mortgage. Now, like I said, you apply logic here, and you know that all their expenses are more than they make on a monthly basis. So, like I said, you can obviously see where the beginnings of this problem began to occur, that the people that were buying some of these homes could not afford them from the day they signed the paperwork. And there were also riskier loan programs out there that just compounded the problem, but I'm really not going to get into detail about those because it would just take up too much time and be somewhat confusing to a lot of people. So like I said, I'm going to keep this a little more simple. So like I said, you can obviously say that just based on the math alone and what reality is, a lot of these people that were doing this could not afford what they were signing for from day one. Now, a lot of the problem I blame on not only greed by the banks because they all wanted to compete with each other, and over time they continued to lower their requirements to compete and, like I said, get a larger portion of the market, which made the problem even worse. But also I put a lot of the blame on the consumers themselves. When you look at that, you know how much money you make, and also you know how much that home payment is going to be. Whatever made you think that you should be buying a home that will cost you more money than you make per month? At what point does logic step in and just say, hey, you know, I really can't afford this. Maybe I should lower my standard or lower my wants a little bit and come back to reality some, and maybe not buy this McMansion. Maybe I'll buy that 2-bedroom home instead. So, I mean, there's tons of blame to go around, but like I said, that's the basis of the problem. Like I said, greed not only among the banks, but also greed among the consumer. And I hate to say it, but also some stupidity mixed in as well. Just because the banks made something available to you and said that if you sign your name here, you can have this, doesn't really make it a good idea. Like I said, you know, a lot of people, I guess, you know, tend to, you know, shirk responsibility and shirk logic based upon their wants and their desires, and, you know, like I said, threw logic out the window a little bit and took upon more risk than they really ever should have. You know, there's really no one else to blame in some of those examples other than those people themselves. And we all know what the end result was. You know, foreclosures hit an all-time high. People are filing bankruptcy. People are losing their homes because they took upon more than they ever could handle from day one. So I hope I really didn't bore you guys. I could have went into a lot more detail, but the video would just be incredibly long. It'd be like a multiple part series. So if there's any questions you guys have, feel free to ask me in the comments section. And as always, guys, I hope you really did enjoy the video. I'll talk to you soon. I hope you have a good one.